Well, they're just out. Home buyers and the markets have been anxiously waiting for today's inflation figures. The commentators say low inflation will compel the Reserve Bank to cut rates at its monthly meeting next Tuesday. So, to the numbers. The annual inflation rate is now 1.6%. It rose just 0.1% for the March quarter. Let's go to Bill Evans, chief economist at Westpac. So, Bill Evans, is inflation under control enough to allow a rate cut?
Oh, absolutely, Ros. The case has been there all year for a rate cut, and the Reserve Bank has held off. But now, clearly, the inflation story, which of course is their #1 policy target, is now saying that rates are too high. Their core number is only 2.15 now. It's at the bottom of the band. So we will see a rate cut next week.
All right, 25 basis points on Tuesday, or perhaps more?
No, I expect it to be 25 basis points. And central banks meet every month, and I think that 25 will be the target for this time, but we can't discount further moves down the track.
All right, looking at the numbers themselves, Bill, what are the main movements?
Oh, look, Ros, the 0.1, which was much lower than the market was expecting. We're expecting about 0.5. I think the market was around 0.7. One of the reasons here was that fruit and vegetable prices were down 16%. We're expecting 9%. That's a highly difficult number to calculate, and of course it's basically been unwinding all the big jumps that we saw a year ago. That's a key factor, but across the board we've seen weaker numbers, and the most important number from my perspective is in the housing sector. The cost of building a house has come down. It has the biggest weight in the index, and that's just indicative of that very weak sector in our economy at the moment. And I think it's very appropriate that it's the one that's telling us that inflation's low, and it's of course the one that will benefit from a rate cut.
How do calls for a rate cut sit with the IMF's recent bullish forecast for the Australian economy? They're saying there'll be strong growth next year and beyond.
Well, Ros, they did lower their growth forecast from 3.5% to 3%. 3% is below trend. That'll be the 5th year in a row that we've had below trend growth. Given the boost that the spending numbers are being given by the mining investment story, that's hardly what I would call a strong economy. Because if you look at the other parts of the economy, housing, consumer, investment outside mining, that's quite weak, and that's the sector that will respond to lower rates.
Bill Evans, thank you.
Thanks, Ros.